Hi there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah. With me is Ankita Saxena. This is a show where we'll be taking you through all your viewer queries, stock-specific queries that you'll keep writing to us on the number that will be flashing on your screens shortly, and we'll get them answered by our experts who will be joining us on the show very shortly. But before that, let's take a look at the market. And Ankita, very smart recovery coming in from the day's lowest point on the Nifty. We're around 130 points higher from when, from the day's lowest point.
Absolutely, Snehi. In fact, a good recovery coming in right before the Liberation Day announcement. Markets seem to be in a good stead, a good recovery as you mentioned coming in for the Nifty and Nifty Bank as well. In fact, we are up almost 0.5% on the Nifty. We are sitting above 23,280 levels for now on the Nifty. Nifty Bank is leading from the front. In fact, Nifty Bank and financials are leading this rally from the front. Nifty Bank is trading with gains of more than 400 points. It's up 0.8% right now. In fact, look at the moves coming in on HDFC Bank, on ICICI Bank. Both of them are trading with gains of 1% right now. So financials are leading from the front. Financials and banks are doing pretty well for themselves. In fact, IndusInd Bank also continues its positive momentum from yesterday. That is up 0.9%. In fact, it's spiked up now and it's trading with gains of 1.6% in trade right now. So continuing with its positive momentum since yesterday. Nifty Realty is seeing some strong recovery since yesterday. It was a top sectoral loser. Today it's trading with gains of 2% as the top sectoral gainer, and Nifty IT has also been reeling under certain selling pressure, has seen some good recovery today. In fact, there was a note by JP Morgan on the IT sector where they've downgraded HCL Tech, and so you'll see some selling pressure coming in on HCL Tech. But Tech M is doing pretty well. In fact, it's leading the pack with gains of 2% on the back of an upgrade that JP Morgan has given Tech Mahindra. So Tech M is trading with gains of upwards of 2%. Tata Consumers is another stock to watch out for because that's trading with solid gains after that positive note by Goldman Sachs that has upgraded the stock and also hiked the target price. So Tata Consumers is firing on all cylinders today, trading with gains of 7.3% in trade. A couple of other names that are in focus today. There's Hindalco that's in focus today on the back of a brokerage note by Antique, and Motilal Oswal has also come out with a note on Hindalco. So that's in focus today. It's currently trading with cuts of, it's given up those morning gains. It's currently trading with cuts of 0.9%. There's Star Health also that's in focus today, which has got an upgrade from Nuvama. And they've upgraded it to a buy from a hold. So Star Health is in focus today, trading with gains of 0.5% right now. Nestle and HUL from the FMCG pack are not doing well because both have been downgraded by BofA Securities. In fact, downgrade coming in on HUL and Nestle. Nestle is down now 1.7%, and HUL is also trading with cuts of 0.4% there. One stock, another mention to this stock which has really spiked up now is BEL, which has that has declined, I beg your pardon, over 5% today as they have missed their FY25 order inflow guidance. So another stock that's declining away in trade is BEL on the back of that miss coming in the order inflow. Currently, it has recovered from the lows, but nonetheless trading with cuts of 3.9%. So that's how market is shaping up, Snehi. Largely a decent day in the markets.
Looking good right now. Can't say the same about what we can expect in market tomorrow on the back of the tariff announcements that's expected to roll in tomorrow. For now, we're holding up pretty stable, so looking good at least for the moment. Let's welcome on board both our guests on the show today. We have Mr. G. Chokalingam, who's joining us. He's the founder and CIO at Economics Research and Advisory, and we also have Hemant Kapadia, Senior VP Institutional Equity at KR Choksey Securities. Good morning to both of you and very warm welcome to the show. Before we start addressing all the queries, let's first up take a look at the number that you can write to us on. That's our number, 865-797-4571 is the number that you can write to us. Viewers, be very mindful of your query. Please very specifically mention the stock you are holding, the stock you're looking to inquire about. If you already have this stock in your portfolio, mention your buy price, how long ago you bought the stock, what's your exact query when it comes to this stock, and what is your holding period going ahead. And also, more importantly, if this is a stock that you wish to add to your portfolio and you're just seeking an opinion for the same, please mention the name of the stock and, very importantly, the time period that you're looking to hold the stock for. So with that, now let's take a look at all our queries rolling in, and we have a lot of them. And Mr. Chokalingam, let's come to you. Let's start with you. We have our first viewer writing to us today. Name is BJ Kulkarni, writing to us from Bangalore. They're holding BEL shares, 25 shares of BEL at 275 rupees per share, asking if they can add more at this price. What's the company looking like, and what do you make of this query?
Yeah, it's a great company, but definitely there is no valuation comfort even after today's fall. So I would be comfortable from our research point of view if stock falls around 250 rupees.
All right, that's the word coming in on BEL. But moving on then, this query is on Dabur. So this is RK is writing in. He needs advice on Dabur. He's holding 100 shares at a buying price of 580 rupees, and he's also holding Colgate of 25 shares at the buying price of 2,900 rupees. So he wants your opinion on Dabur and Colgate. I'll come to you, Mr. Kapadia, now.
Okay, thank you for having me on the show. It's always a pleasure. Dabur has gone nowhere for the last 4 years and nothing has changed. We had crucial supports at 480. I think that needs to be kept as a stop loss. If there is a weekly closing below 480, that means there's going to be further pain. So we are in a short term and medium term downtrend. And like I said, even the longer term picture doesn't look very promising. So it would be a sell with a stop loss of, I mean, it would be a sell on a when a stop loss of 480 gets triggered. Otherwise, slow moving stock gone nowhere, sell on bounce. Colgate is also FMCG, but relatively, Colgate has been under more pressure than Dabur. Having said that, deeply oversold. We need a close about 2440. Nothing very promising over here. Even the longer term time frame charts don't suggest anything positive. So it's a sell on bounce for both. They don't look like doing anything in the near to medium term.
Okay, so that's the take on both Dabur and Colgate, two consumption names over there. Thanks for that view. Mr. Chokalingam, we'll come back to you, and the next query is coming in from our viewer, Ms. Renuka Chaudhary, who's writing to us from Patna. The stock in question is Mahindra Holidays. She's asking for an overall sector view. Can the hospitality industry's tailwinds now lift Mahindra Holidays shares higher? She's got 100 shares. Recently, she's got that at a buy price of 286 rupees per share. She's asking if she should buy more, continue to hold, or exit, and is asking for an overall view of the hospitality industry and in particular how that could affect Mahindra Holidays. What's your view there, Mr. G. Chokalingam?
Yeah, hospitality industry really would do well in the short to medium term. There is no doubt about it. And Mahindra Holidays in particular, it has corrected a lot. And coming from the most reputed group in terms of performance, I would hold a research view of buy for long term at the current price.
All right, that's Mahindra Holidays, but we'll move on then. Now, this is Mohit writing from Ludhiana. He says he's got 1,500 shares of Shipping Corporation of India. He's bought it at a price of 39 rupees. He's also got 1,500 shares of SCI Land and Assets, and he wants to know whether he can hold it for the next 2 years. So SCI and Shipping Corporation of India and the assets and Shipping Corporation of India. What's your take coming in on this one, Mr. Kapadia?
Data for the assets part of the business. For technicals, I would need significantly more data. So I'm not sure if I can have a proper qualified comment for that. But having said that, whatever data I have would seem to indicate a turnaround is on the anvil. Downside appears limited. And now one gets the feeling that SCI assets would recover from here. Now, coming back to Shipping Corporation of India, almost a similar view. Worst is over. There's been a volume spike, looks good above 185. It's fallen off very sharply from 385 to 140, became half. Not much to lose. A recovery is around the corner. So it's a hold for both.
So that's the take coming in on Shipping Corporation. Let's move on, and Mr. G. Chokalingam, coming back to you. We have our viewer query coming in from our viewer Bala, who's writing to us from Chennai. His query is to whether hold or sell Rallis India. He's saying he's been holding this stock for more than 3 years now, and he's at a loss of slightly more than 10%. So he's saying if he should sell Rallis, and if so, should he put all that money in SBI instead? So two stocks in question, Rallis and SBI. What's your view?
Yeah, Rallis India comes from good management, but then valuation is stretched even after the crash. So for medium to long term, I prefer SBI. Now it is trading around close to one time adjusted book value, SBI. And if you account for possible growth the next 2 years, it is available at a discount. to book value, adjusted book value. So I believe that it is one of the most high conviction stocks in the large cap space, SBI.
All right, moving on from that then, I'll come to you, Mr. Kaparia. Now, this one's coming from Suresh, who's writing from Kerala. He holds 50 shares of Cochin Shipyard at a price of 1300 was his buying price. He wants to know, is this the right time to buy more? Now, Mr. Kaparia, all these PSU names have corrected almost 40 odd, in fact, Cochin Shipyard has corrected almost 40 odd percent in the last 1 year. Last 1 month, it has given some strong momentum of 15 odd percent returns. So from here on, do you see the positive momentum continue? And is this the right time to get in now?
Yes and no. Do I see the positive momentum continuing? Yes, but I think it's also based on the fact that the market has recovered. The market needs to remain copacetic for Cochin Shipyard to perform. Having said that, it's been down for 8 months. That's significant, very strong support at 1200. So I would say even from a slightly longer term point of view, the time frame is for 2 years or more. It's a hold, and like the viewer was mentioning, yes, I think it is a buy at current levels. It is set to stage an up move from here, like you said, after a very significant correction. Yes.
Okay, and Hemant and Mr. Chokalingam, please be on with us. We'll just shift focus and talk about AGS Transact. That stock is locked in a free fall. It's off over 90% from its 2025 highs, and just in 2025 itself, the stock has tanked by 88%. Let's go across to Sharad, who will put the moves into perspective. And right now, also lower circuit, 5% lower is where the stock is right now. Sharad, take it away and tell us what's been ailing AGS Transact to this extent.
Well, interestingly, we had pointed out the same stock in the month of February as well as March, when the prices were more than 30 rupees per share. But there has been a significant destruction of shareholders as well. And now the new news flow is coming in is that there more resignations are coming in, as the CFO, Saurabh Lal, has resigned from the company. Interestingly, 2 executive directors have also resigned. Now, also, there is a problem brewing in the company, and several months rent payment has actually not come from the landlord whose premises have been leased, and we had actually mailed our queries to the company. The company had stated that all this outstanding rent is there in the trade payables which they push in their financial accounts. But this was not satisfactory response as what we are expecting from the company, and there are certain key reasons also which are plaguing the stock. This includes that the company and its arm 2 months ago, they defaulted in the payments, roughly almost 22 crore rupees, and credit rating also downgrades coming in when it comes to CRISIL and India ratings from March 3rd to March 4th. ATM operations overall have impacted the banking operations, and if you look at it, the total dues, especially around Axis Bank and SBI, this includes almost 726 crore of this amount. Now, the promoters have also been on a selling spree. Over the last 1 year, the promoters have reduced the stake by almost 6% in the company, coming in at 59%. And interestingly, all the independent directors have resigned. Not an important commentary coming in over the massive share fall happening over the last 2 to 3 odd months. And we can see from 1 year itself, the stock is down 90%. From 2025, stock is down 88%. From 2024 highs also, the stock is down almost 94 odd percent. Now, what will happen going ahead? That's something which the corporate governance issues might be raised going ahead. And of course, the stock has been on a downward trend over the last 2 to 3 months.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back with your queries and we'll get them answered by experts. So stay tuned.
Hi there viewers, welcome back to Buy Now Sell Now. Let's keep it going with all your viewer queries. And Mr. Chokalingam, I'll come to you. Next query is coming in from our viewer, Mr. Arunacham Balaji, senior citizen from Tamil Nadu. He's the stock in question is IOB, Indian Overseas Bank, and he's saying that he has 3,000 shares at a buy price of 50.6 rupees per share. He's now sitting on a loss of roughly 34,000 rupees. He's asking if he should add 1,000 shares more at the current level where the stock is at 37 rupees and his buy price is 50 rupees. So quite a significant loss is what he is sitting on. Should he book his loss and exit, or should he continue to hold on in hopes for a recovery here?
Yeah, most PSU banks are down. In fact, many of them down 30 to 40%. IOB is also down. So one need not book profit because many of these stocks have come back to around the one-time adjusted book value. But however, in public sector banking space, I am extremely optimistic on two stocks. One is Bank of Maharashtra, and second is Canara Bank. So I believe Bank of Maharashtra is far superior to IOB. That's my firm research conviction.
Right, Mr. Chokalingam, I want to stay with you because the next query is by Subrata Mukherjee from Kolkata. Wants to know, wants your advice on CDSL. Now, in CDSL, the stock has given some stellar returns over the last 5 years. It's given 1000% return to the investors. But then, we did see, in the last 6 months, of course, in the market downturn, we saw a correction of 14%. But from here on, it's a capital markets is a big theme. But what do you pencil in for CDSL, given the fact that it has run up quite a bit?
Very interesting question. It's a really amazing long-term growth stock. It is unfortunate that the stock is down 40% from 52-week high, purely because of the meltdown in the stock market. But I have an extraordinary conviction in the stock for the long term because it has got a leadership position in the depository service. And second, the capital market is going to be vibrant for generations. And we already seen the investor base increasing to 21 crore now. It used to be around 5 crore for more than 100 years. But in the last 8-9 years itself, from about 5-6 crore, it has become 21 crore. And firm like CDSL would be the beneficiary of this robust increase in the investor base in the country. And also, we are seeing a lot of IPOs. The IPO space also will continue to see the momentum in the long term. So I believe that this is one of the rare and few stock which gives you a lot of confidence on the steady and consistent growth for a very long term. And I personally do not own the stock.
Kapadia, let me come to you then. I mean, given the bullish view that Mr. Chokalingam is giving on CDSL, the stock has run up quite a bit. So what's the headroom for growth? What's your target for this?
Frankly speaking, Ankita, we are in a longer term uptrend, but we slipped into a correction of a greater degree. Keeping in mind, we've had a phenomenal run up, we've had a 1-for-1 bonus. So I believe I'd agree with what the fundamental guest says. Longer term point of view, looks good, is good. Currently, a medium term bottom is being formed. So once again, not much to lose, looks great from a longer term point of view. Yeah. And specifically from my target point of view, the first target would be 1600, the second would be 2100, but this is from a 2-year or more point of view, actually.
It's a bullish call coming in and lofty targets coming in on CDSL, of course, with a slightly longer term time horizon in mind. Let's move away from CDSL and Mr. Chokalingam. Next query coming in from Mr. Nikhil Sharma, who is our regular viewer from Mumbai. He has 40 shares of Imami Limited at a buy price of 580 rupees per share. He's asking if it is worth it to hold, and the stock in question is Imami Limited. It's at 601 right now. He's got at 580. So nominal profit is what he has made. But fundamentally, do you believe that the company is strong enough for him to continue to hold going ahead?
Yeah, definitely. Relatively, valuation wise also, Imami gives more comfort. Stock also fallen a lot. And particularly, when we are anticipating moves on tariff war, this kind of FMCG company becomes defensive also. But however, in the medium term, for that purpose, even in the short term, expecting a very high return from FMCG companies quite difficult because the volume growth is in single digit. That is likely to continue for at least another 1 to 3 quarters. Yes, it's a defensive, decent return one can expect, but it's not going to be a solid wealth creator in a matter of 12 to 18 months.
All right, Mr. Chokalingam, I'll stay with you then. This is the question from Satya, and he wants to know that he doesn't hold any real estate stock in his portfolio. He wants to know if DLF is really the best option for longer term. Says that 15% CAGR from here on. Do you expect that? If not, then do suggest a good name in the real estate sector is what he wants to know.
Yeah. So DLF is a really good stock, particularly it is in the large cap category, so it will be more defensive. Recently, we saw the media interview also saying that by 2030, the profit should double. So I agree with them, all this possible. So it's a really good stock for medium to long term in the real estate space.
Okay, so DLF looking good from the real estate space. Let's move on. And Himen, coming to you, our viewer Mr. Subramaniam is writing to us from Secunderabad. He is holding 33 shares of BSE at an average price of 5,126 rupees per share. And he's asking if he should hold or sell in the light of the bonus share declaration. So that's the reason that he's actually holding on to the stock for. But rather than that, if you completely omit that and just look at the stock on the charts, what is BSE shaping up to be like? His buy price was somewhere around 5,100, stock at 5,500 right now, so looking good. But what's the outlook going ahead on the charts?
The outlook remains positive, but we are walking into a virtual roadblock. Okay, 10% away from here almost, but we are walking into a virtual roadblock at 6,000 and above. We have never closed above 6,047 in the listed history, and we've turned back thrice from there. So yes, further upside closer to 6,000, I think he can book some profits. But otherwise, the setup remains positive, and the longer term charts also seem to agree for a longer term, for a bigger upside. But yeah, if the investment horizon is slightly short and there is concern about some profit booking ideas, 6,000 level is where you can book some profit.
All right, Mr. Chokalingam, I'll come to you then. And this is Rajan Manchanda who's writing, wants to know about Vodafone Idea. Now, he holds around 50,000 shares at an average buying price of 9 rupees per share. He wants to know if he can hold it for the next 1 year. What's your view on the stock, especially after the news that's coming in? The debt burden has been lifted away now. The government is also holding a stake that is almost a 49% stake in the company. And with a capex plan of 50,000 crores for the next 3 years for this company, what do you pencil in? Really, is this company out of the woods now?
Yeah, it's a very interesting development. This is what I've been saying consistently, that fundamentally it's not a buy at all. It's very difficult to justify, but it can become buy only if the government compromises on its receivables from the company, or promoters make some sacrifice in terms of writing up part of the equity, or the lenders make sacrifice. So one of these three things have happened now. That is, government has come forward to convert into equity. So it's too good for the business to stay and sustain. I'm very confident that this business will stay. But for the shareholder, does it mean very significant return? At this point in time, I don't think so at all, because its equity base is already over 70,000 crore. Now further the equity base will balloon in a very big way. And to justify that, the annual revenue, which is going to be less than half of the equity base, is going to be very difficult. So some more sacrifices are necessary, either from the shareholder or government or from the lender. Then only it can possibly give a significant upside. In the absence of those possibilities, it is not possible at all. So therefore, my conclusion is that it's a tactical call for little risk-taking investors. Those who can take risk, definitely they can buy. In case any further restructuring happens on the equity or debt front, then this can give you a good return. Otherwise, the potential loss is also there.
Okay, so that's a take on Vodafone Idea. Mr. Chokalingam, I'm going to come back to you because this query is specifically for you. Our viewer, Mr. Sunil G from Vadodara, is writing to us, and he's asking that amid the small private sector banks, what's your opinion on Karnataka and Karur Vyasa Bank? So he's asking for small banks, so Karnataka Bank and Karur Vyasa Bank. If you have to pick anything other than Bank of Maharashtra when it comes to the slightly smaller banks, what's your view on either of these, and which one from these two would be your pick?
Talk on Karnataka because of our compliance policy. Yes, Karur is a good bank. It has survived more than 100 years successfully. For medium to long term investment, Karur Vyasa Bank is a good buy.
All right, goodbye there. Call coming in, Karur Vyasa Bank. But coming to you then, Mr. Chokalingam, this query is specifically for you. This is Krish writing from Chennai. Wants to know about Narayana Hrudayalaya. He holds 55 shares at a buying price of 1,575 rupees. Wants to know if he can add more for the next 3 years.
Yeah, for next 3 years, yes. If there is any small decline, one can add. But the fact is that the valuation comfort is not there. If you look at the enterprise value per bed, But however, definitely for 2 to 3 year time frame, this can give a decent return. So for long term, accumulate on any possible decline. That's my research view on Narayana Healthcare.
Okay, well, time to slip into a short break, and after that, we'll keep addressing all your viewer queries. Just quickly want to address the ticker on the bottom of the screen. Bharti Airtel and Nokia have expanded their core network partnership. This is what we understand from agencies. On the back of this, Bharti Airtel doing pretty well today, 1.3% uptick coming in on the stock, and that's the chart for you. Looking good and inching towards the day's highest point is Bharti Airtel on the back of that news flow that's flashing on the bottom of your screen. But on that note, we'll slip into a very short break, and when we return, we'll keep addressing all your viewer queries. So viewers, keep writing to us on the number that's flashing on the top of your screen, and we'll be right back and once again begin addressing all your queries.
Welcome back. You're watching the Buy Now Sell Now, where we are taking all your queries and getting them answered by the experts. And you can start sending your questions on the number that's flashing on top of your screen. Well, let's get going yet again with all your queries. Then I'll come to you, Himen. So this one's from Thomas George, who's writing from Kochi. He holds 500 shares of Titagarh Wagons. He's bought it at a price of 950 rupees. Wants to know what should he do with the stock. I believe this is for the longer period. 500 shares of Titagarh Wagons. What is your take on this?
Well, Ankita, firstly, it's a hold. Strong support at 655. We've had a 4-year rally. We've seen a correction of a greater degree coming in, and this is not restricted to Titagarh Wagon. It's maybe even a PFC. We spoke about Cochin, n number of PSU stocks. So they ran a fast. The reality check. You had the time price correction catching up. That's what is happening. So very clear hold the way I see it. But once again, the time frame needs to be 2 years or more, because if you had a stock which multiplies 10, 20 times, give it a couple of years of a correction before it starts moving up again. Setup is fine on the very long-term charts, but this is the correction itself is going to take maybe a year or year and a half more to play out.
On Titagarh Rail. Let's move on, and Mr. Chokalingam, next query coming in from our viewer, Miss Smita Vikram, who's writing to us from Bangalore. Stock in question is Tata Consumer. Her buy price is 1180 rupees per share. Now today we've seen a very bullish brokerage note coming in. This stock is up 5-6% in trade today. She's asking that with a short-term view, could you suggest what to do with this stock? And Hemen, we'll come to you on this as well, because she's also requested a target price in the short term. And until then, what should she do? Should she continue to hold to expect to see decent returns? So Mr. Chokalingam, you go first with the fundamentals on Tata Consumer, and post which, Hemen, we'll come to you for the targets that you are spotting for Tata Consumers.
Yeah, certainly the valuation comfort is not there. The whole industry, as I mentioned, FMCG is likely to grow the volume in single digit only for next 1 or 2, 3 quarters also. So I would prefer in the large cap space stocks like SBI or Mahindra. These are the large cap stocks which give us a lot of comfort on continued growth in the business and profits. And valuation also quite comfortable as compared to stock like Tata Consumer. So my research view is sell Tata Consumer, buy SBI or Mahindra & Mahindra.
All right, quite the contrary call that we see coming in on Tata Consumer, especially after the note that came out today. But coming to you, Mr. Kapadia, then this is this query is for Bata. Now this is from Venugopal Reddy from Hyderabad. They want to know that they have Bata and they've bought it at a price of 9 shares at a price of 1,600. Want to know if they should hold it, average in, or sell at this given juncture.
I would suggest to hold the way I see it, Ankita. Once again, it's had a phenomenal move. We have seen it being corrective for the last almost 3.5 years. Having said that, currently a very limited downside, and I'm not sure her cost price is going to come in a jiffy. But yeah, I would suggest a hold, because currently it's almost at a medium-term bottom, or turnaround is in the offing. So I think if it is to be a sell, its sell should be around 1480, because the cost price of 1600 probably takes some time coming.
That's the take coming in on Bata India. Just very quickly, Hemant, want to come back to you about that technical view on Tata Consumer, since our viewers requesting for it. What are the levels that you are spotting in the short term as well as the medium term on the charts?
Is the important level on the daily and weekly charts. It's a virtual roadblock. So in terms of targets, we're almost there. So 1075 is one target, but yes, if it closes above 1075 for a few trading sessions or on the weekly chart, I think then one can add or expect the next upside target to 1120. So 1075 needs to be properly kept a watch on. If that gets overcome, 1120 would be the next one.
1120 is the target price coming in for Tata Consumers, and well, viewers, we also had Goldman Sachs note that came out on Tata Consumers today, and they've upgraded the stock, and their target price, so they have raised it to 1200 from an earlier 1040 rupees. So that's the take that Goldman Sachs had come out with Tata Consumers, and on the back of that, it's running up 7% in today's trading session. So that's Tata Consumers, both in fundamentals and technicals. But moving on from there, this one's coming from Naveen, who's writing from Chennai. He wants to know about Tube investment. Is this the right time to enter this counter for a time horizon of the next 1 to 2 years? I believe, Mr. Kapari, you should answer whether this is the right time, is the right entry point on the technicals to enter the stock.
Well, I would suggest not buy the complete quantity at one go, because I believe there would be some more declines left with ups and downs. So I would suggest buy 1/3 at current levels, or maybe half. 1/3 would be a proper view. A bounce is coming. After that, if 2400 breaks, I think the viewer can get it at around 2200. So do a SIP sort of a scenario if you're convinced about the fundamentals, because technically the stock has entered a corrective phase, and I believe this correction could take some time to play out, notwithstanding a 15-month high volume in the current month. Yeah.
Okay, so this strategy, if we're convinced about the fundamentals, Mr. Chokalingam, are we convinced about the fundamentals on this one? That's Tube investment. What's your take on the fundamentals for this one as well?
Yeah, it's a great company coming from Murugappa Group, and the last 30 years of growth has been phenomenal. But, individually, the stock is still stretched in terms of valuation. So I would be comfortable, if stock corrects at least to around 2200, then only I would consider as a buy. Otherwise, at best, it's a hold from my research point of view at the current price.
All right, moving on then. Mr. Chokalingam, I'll ask you then. Shrikant is writing from Hyderabad. He's holding Vedanta 100 shares for 320 rupees per share. He wants to know what's your outlook, keeping in mind the demerger, of course, of the company. They have extended their deadline also till the 30th of September. But what is your view post the demerger? What are you penciling in for Vedanta?
Understand Vedanta, in fact, honestly speaking, I have a very limited capability, because about nearly 8-9 years back, they merged companies like Care India, saying that it is good for the shareholder. Now they are doing opposite. They are demerging, saying that it's good for shareholder. So, despite having more than 3 decade experience, I'm not able to understand, the logic on that. And also, looking at, the balance sheet and business models, I would prefer Hindustan Zinc from the same group that has an excellent balance sheet as compared to Vedanta, and it has got a silver business which is now emerging close to 40-45% of the total profit, and all of us know that the world over silver business is valued much better. So I would prefer to give a sell call on Vedanta and buy Hindustan Zinc.
So exit Vedanta and instead go to Hindustan Zinc from the same sector as the call coming in from Mr. Chokalingam. Hemant, coming to you, let's talk about Jio Financial Services. That's the next query coming in from our viewer Sujata, who's writing to us from Bangalore, and the stock in question is Jio Financial. Now when I pull up the charts, last 6 months, last 1 year, more than 30% cut is what the stock has seen. However, her buy price is 87 rupees per share. Compared to that, where the stock is right now, it's still a very good profit. profit that she is incurring despite how much the stock has fallen from previous levels. What are the next levels that you're watching for Jio Financial, and should she continue to hold or just book her profit and exit this before you foresee any further fall on this stock?
I would suggest to hold Sneh because 204 is a level which has been tested 5 times over the last 2 years. It may have been breached intraday, intraweek, but it has never closed below 204 on the weekly chart. There was one closing just around 200 on the daily. So what I mean to say is we're at very strong supports. A medium-term base is being formed. There's a huge volume spike a few weeks back, huge. Now, if this was a year-end entry, I'm not sure. But if this was actual volume, more than 15 crores, I mean, that's massive. So I believe the worst is almost over. Having said that, we need a close about 235 to 237 in the medium term to appreciate further. So the way I see it, it's a hold. It's technically things are improving almost after 11 months of a downfall. So I'd say hold.
It's a hold on Jio Financial Services. But with that, let's slip into a short break. Don't go anywhere. We'll be right back with some more queries on the other side. Stay tuned.
Hi there, welcome back to Buy Now Sell Now, a show where we are getting all your stock-specific queries answered by both our experts on the fundamental as well as the technical side. So keep writing to us, viewers. You can write to us on the number that's flashing on the top of your screen. There it is. Let's keep it going with all your queries coming in. And Himen, we'll come to you. Technical query is what we have. And our viewer Vidya is writing to us from Chennai. She's a short-term trader. She's looking to make a fresh entry into railway counters, Titagarh and RVNL. Titagarh we spoke about earlier. But if you could give a slightly short-term perspective on that stock, and RVNL is the stock that she's talking about. She's asking if now is the right time to enter, or if not, what would be a good entry price for the short term. So that's her query, and what's your view on that?
Not fair to compare stocks, nahi, but technically speaking, Titagarh seems better place than RVNL. If she does want to buy RVNL, then at current level, the stop loss of 3110 comes in. It will sustain or give her returns only on a close about 380. As far as Titagarh is concerned, it looks relatively better. We're at 796 in the cash market now. So one can buy at around 780. Stop loss of 740 and a target of 880. This is not, it's not exactly short-term call because last week's trading session has gone nowhere. It's probably a positional call for the current month, Sneh.
All right, Mr. Chokalingam, let me come to you also on the railway pack, because there was someone else also asking us about the railway counter, especially RVNL, Titagarh we have spoken about. But for RVNL, this has seen a fair bit of correction, almost 30 odd % corrections coming in on these PSU railway stocks. But fundamentally, do you see value for the next 2 to 3 years in the railway counters, specifically RVNL?
2-3 years, definitely. Nobody will lose it. But in the next 1 year, I doubt whether one can see a significant return, because FY 2026 budget was presented in February 25, and there we don't see any solid growth in the allocation for railway capital program. So therefore, FY 26, it's very difficult to expect tremendous boost in the orders or revenue growth for railway stocks. And secondly, these railway stocks, they once in 3-4 years, they boom, and invariably, if you look at the last 15-20 years, they also crash very badly. So my humble suggestion to all retail investors is that when you are chasing in a bull market, thematic ideas like this in railway, always be careful and don't compromise completely on the valuation comfort, because they are known for creation of wealth, and they are also known for severe fall in the short to medium term. Then once you lose heavily, it might take even 3 to 5 years. That's what I learned from these pack in the last 20-30 years. So yes, if somebody is losing heavily and willing to wait for 2 to 3 years, yes, railway stocks will come back after 1 year. Most probably FY 27 budget allocation can be far better. So it's a hold for minimum 2 years.
Okay, so whole call coming in. If you have a 2-year or longer perspective on Rail Vikas, that's the view coming in. Let's move on from that. And Himin, coming to you once again, struck in question is TVS supply chain. Our viewer, Miss Poonam, has 200 shares of TVS supply chain. Her buy price was 150 rupees per share. Let's just pull up the chart and see where TVS supply chain is at right now, 125. Okay, so that's a little bit of a cut from her buy price, a 25 rupee cut. So, Himen, what would you suggest for the on the charts right now, and for our viewer, Miss Poonam specifically? Should she continue to hold, hope for a recovery if that is something that you are spotting on the charts, or book this loss, nominal loss that she has seen in case you are spotting a further downfall on the stock?
Oh, me, I have a couple of years of data, probably not enough to take a longer term call, and we are at all-time lows. So things are not looking exactly great. Despite an oversold situation, the stock refuses to respond in terms of a recovery. So I would say hold as of now. Keep this swing low of 118 as a stop loss. A close up of 145 should mean technical green shoots. I believe it's so oversold that a recovery is just around the corner. So as of now, it's a hold. And like I said, not that much of data to take a very longer term point of view. But yes, a bounce is definitely around the corner.
All right, that's the word coming in from TVS supply chain for TVS supply chain. Now let's move on. This is Balakrishna writing from Chennai. He wants to know both technically and fundamentally whether MTAR Tech is a good stock to hold. He's currently holding that and he's sitting at a loss of almost 30%. So he wants to know, is this a good bet for the longer term, Mr. Chokalingam? And then I'll come to you for a technical view on this.
Yeah. Even after such a major fall, I don't have a valuation comfort on the stock, considering the fundamentals. So I would, at best, I would give a hold for long term. But in case the stock recovers, 10-15%, then it could be a good sell.
Right. Let me come to you, Mr. Kapadia. Then still no valuation comfort in that particular stock. But from a technical point of view, he's already sitting at a loss of 30-odd%. From here on, do you see any up moves coming in now that it's fallen so much?
4 years of data, Ankita, but things don't look exactly great. 1200 is very strong support. If 1200 were to break, I think that would mean further pain because it has not closed below 1200 on the monthly chart since July 21. So doesn't look good. The setup is still bad. Yes, oversold, a recovery possible. Very strong resistance at 1500, but doesn't look convincing on the longer term charts. The weakness continues. It could get exacerbated below 1200.
Okay, well, not looking very convincing on the long-term charts is the view coming in from Himen on MTAR Tech. Let's move on from that. And Mr. Chokalingam, we don't have the name of the viewer. The next query is coming in for the stock BHEL, and a viewer has bought it at 370 rupees and holds 290 shares. Once a view for the longer term in terms of the fundamentals, how is this company shaping up to be? And also the viewers asking if they should average at current levels or completely exit, because buying price was 370, the stock is at 210, so quite a significant loss is what they are experiencing right now. So what's your view? Can they hold on basis how fundamentally sound the company is, if at all, and what's your take on this?
No, unfortunately, even after such a major fall, it doesn't give a valuation comfort. So I would give a sell call on BHL. If somebody is interested in PSU pack, I prefer stock like Coal India. That would be far superior to BHL from my research perspective.
All right, Coal India is preferred over BHEL is the call coming in from Mr. Chokalingam. But moving on to the next query, and this is on Natco Pharma, I believe. Vinker is writing from Chennai and he's bought this at a price of 1,350 rupees. He wants to know if he can accumulate this further and when is it expected to go up, and the expected target price. Now, it's difficult to say when will it go up, but what would be the target price for this, Himen?
Ankita, I don't want to break the viewer's heart, but when will it go up? I'd say when will it stop falling? Because even after such a steep fall, the setup, okay, it's oversold, but oversold doesn't mean that we'd see a very strong bounce coming in. it seems more like a dead cat bounce. Having said that, 850, 940, 1050, very strong resistance levels. Support comes in at 740 and 700. So frankly speaking, not looking too good. A bounce, yes, but I'm not sure this is worth adding currently. No, I think this would take some time to play out. Let's wait for some more time.
Okay, well, very unfortunate view coming in on Natco Pharma. Viewers, I hope you are alerted on the same and have taken stock of the same as well. Let's move on, and this is the last query that we'll be able to squeeze in today. So let's come to you, Mr. Chokalingam. And this is our viewer, Mr. Anand, who's writing to us from Bangalore. The stocking question is ITC Hotels. He's holding 250 shares at an average price of 210, asking if he should buy more, average or exit. That's ITC Hotels stock at 203. He's got at 210. So, not much of a loss right now, but it's too soon to have a technical view because, it's just recently demerged, so we don't have a lot of chart history, very limited chart history. So, Mr. Chokalingam, you take this up on the fundamentals, and if you can explain to our viewer what's the rationale on ITC Hotels.
Yeah. So at current price, one may not make much money in the short to medium term, but definitely this stock has excellent long-term potential. Because ITC has left some cash with this ITC Hotel for financing its expansion, and also the outlook for entire hotel industry looks to be very, very robust for the next 1 to 2, 3 years. And ITC brand, all of us know how big it is, and ITC Hotel also has a lot of expansion plans. So if somebody is willing to wait for 2 to 3 years, I believe this is a great long-term buy. But within a year, it may not give big return because in terms of EV to EBITDA, it is one of the costliest sectors as well. But long term looks very, very rosy.
All right, a long-term view, bullish long-term view coming in there. But on that note, this was the last talk for this show. So Mr. Kapadia and Mr. Chokalingam, thank you so much for taking the time and joining us today. Well, that was the last talk. And with that, we bid you goodbye. Snehi and I will take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.